Today I want to talk about how emergency margin calls are happening, not just in Japan, but around the entire world right now, and how this is a major deal for the overall economy, for the market crash, and for the AMC squeeze. So stay tuned, and let's make some money. And now to dive straight in with the key information. So, Lit Exchange tweeted saying Japan Securities Clearing Corporation issues emergency margin call today. As you can see from this screenshot, the Japan Securities Clearing Corporation issued an emergency margin call today on the 20th of December 2022. And as Michael tweeted, he said this margin call is huge. A massive portion of US Treasury holdings are held by Japan. He said if Japan cannot fulfill the margin calls, they can ask the US for a substantial amount or a substantial portion of its loans returned, and the US then ends up in a financial crisis as well. From Investopedia, if we look at the top foreign owners of all US national debt, we can see that Japan and China hold a massive portion. Around 30% of all international debt, or all international US debt, is held by just two countries. Obviously, if Japan is in trouble, they can try and sell off or dump these US Treasury holdings to get some actual cash back to meet their margin requirements. But obviously, dumping bonds on the cheap or even recalling the cash from these bonds is disastrous for the US overall economy. As Robert tweeted, he said if Japan dumps Treasury bonds, and so do a few others in China, the UK and in Luxembourg, the US has no choice but to crash the stock market to save the bond market. Many of these hedge funds will have to dump their equity stock holdings to prop up the bond market and effectively rescue the economy. But obviously by doing so, that would crash the stock market, and as Robert tweeted, he said it would cause an 80s scenario stagflation. But obviously on the flip side, that would also cause AMC, Ape, HYMC, GameStop and the rest of the meme stocks to start the mother of all short squeezes. There was also a recent article that said the biggest money managers are selling off $100 billion of stocks by the year's end, says JP Chase. Now this article was obviously released a few days ago, but is even more relevant today as many of these hedge funds are going to have to dump stocks to potentially prop up the bond market. As Stephanie tweeted, she said, I guess these hedge funds, these market makers, these brokers and these banks are having to capitulate as retail is not doing it for them. You may remember that many hedge funds and many mainstream media outlets were publishing saying that retail investors have to capitulate for the S&P 500 in the market to set new highs. Obviously, retail investors simply aren't selling, and that's why the market is falling further due to these over-leveraged hedge funds not closing out of their short positions. They're risking the overall economy, they're risking the health of bonds, and they're risking the health of the overall stock market just to prop up their shorts. As Stephanie tweeted, she said a blood red market is not bad for AMC in the long run. They're having to liquidate their positions, it's not us selling. They are hurting, and a lot of positions they're in are upside down. The article says a recent JP Morgan and StoneX Group study has revealed the world's most prominent money managers are in the process of unloading up to $100 billion of stocks by the end of 2022. It says sovereign wealth funds could be selling roughly $29 billion in equities by the end of December. And meanwhile, US defined benefit pension plans will need to shift up to $70 billion from equities to bonds to hit their targets. We know these very same pension plans have been over-leveraged, investing their money into hedge funds who have been losing tons and tons of this pension money, and therefore they need to shift $70 billion from equities to bonds to prop up the bond market. On top of that, it says JP Morgan also mentioned that Japan's $1.6 trillion GPIF pension fund would have to sell $17 billion of equities to reach its target asset allocation. And again, as I said, this is even more relevant today due to Japan's emergency margin calls. Now, you may have also seen that Michael Burry tweeted the other day saying long ago, far away on the set of The Big Short. And as Ghost Trader replied, he said again, for those who don't get it and want a translation, the scene is where investors want their money back as they do not trust the market direction. He said recently some institutions like Citadel have limited withdrawals and some investors withdrew most of their investments. And therefore he expects over the next 2 to 4 months the stock market will continue crashing and we could potentially be at a bottom in the next 2 to 4 months. Therefore, it seems like Michael Burry believes that he is once again correct on the wider market. He knows the crash is coming, he knows that institutional investors want their money back because they don't trust the overall market. Michael Burry is clearly convinced in exactly what is going to happen. He's sticking to his guns with his money, but he is aware that many hedge funds are trying to withdraw money, and many investors into these hedge funds are trying to withdraw money as well. These hedge funds are clearly on the wrong sides of their trades, aka because they're still long on the overall market and they're still short on meme stocks. Whereas Michael Burry knows that it's obviously the correct answer to be short on the overall market right now due to the market crash. Also guys, if you haven't already, be sure to sign up to Moomoo right now using the link in the description below. You can currently get 23 stocks worth up to $2,000 each. And right now, as a special occasion for the Christmas period, Moomoo is currently holding a $60,000 giveaway sweepstake. Right now, many institutional investors are scared and they're panicking that the markets are falling so heavily. That's why we're seeing such significant outflows and withdrawals from many of these hedge funds. And many of these hedge funds like Citadel are actually having to restrict their withdrawals due to the amount of withdrawals exceeding their budgeted and planned amounts and exceeding their models. Obviously, these hedge funds have invested too much money, they're over leveraged and they've doubled and tripled and quadrupled down. And now that investors want to withdraw, they don't have the cash on hand to pay out those withdrawals. And as Retail Stocks tweeted, he said, putting it simply, I believe AMC is poised to survive the current crisis hitting the global economy and come out far stronger than even pre-pandemic. Even though we're in the midst of a financial crisis and in the midst of a recession, AMC is still succeeding. They're still generating cracking numbers at the box office, and AMC is generating more and more and more cash. Adam Aaron also said that he believes AMC will survive and even be stronger than pre-pandemic numbers. Therefore, we've got this brilliant balance of AMC improving as a company and generating more cash and surviving the financial crisis, not going bankrupt, while shorts are even more financially stressed to keep their positions short. Right now, we're seeing emergency margin calls going on in the wider market. Shorts are losing hundreds of millions, if not billions, if not trillions of dollars every single day as the market continues to crash. These shorts are indeed getting closer and closer to margin calls, but AMC isn't getting closer and closer to bankruptcy, they're getting further and further away. And on top of the margin calls we're seeing happening right now over in Japan, which could impact the wider US financial system, we're also seeing trouble in the crypto paradise as well. Gold Telegraph tweeted saying, breaking news, Binance's former chief financial officer, their CFO, did not have access to the company's full accounts during his 3-year tenure. That is absolutely crazy. Even the CFO did not have access to Binance's financial statements or all of Binance's actual financial data. Obviously, this information is being hidden even from the CFO himself, as they know this information is dodgy and it would not pass an audit, as Binance are likely to go insolvent. And furthermore, Gold Telegraph tweeted saying, breaking news. The accounting firm BDO, which is separate from the accounting firm Mazars, which recently signed off on reserves reports for Tether, says that it's reconsidering its work for crypto companies. We saw a few days ago that Mazars was cancelling all work for Binance, Crypto.com and Kraken, and now a separate accounting firm, BDO, is also cancelling all of their crypto-related work as well. They know the wider crypto market has further to fall, and many of these accounting firms don't want their names and reputations on these audit reports. BDO obviously knows there's problems going on over at Tether, and they will not be signing off on any further audit reports, as BDO does not want its reputation tarnished. And finally, as Bitfinex tweeted, he said, I wonder why Binance is suspending so many withdrawals, but is allowing deposits. As you can see, Binance has currently suspended withdrawals on Cardano, on Avalanche, on Monero, on Filecoin, and on the Graph, and many other crypto coins as well. But interestingly, all of these deposit statuses appear normal, so they're plenty happy for you to deposit more crypto, you just can't withdraw it. This obviously comes after Binance suffered $6 billion of withdrawals in only 2 or 3 individual days. I've also seen many replies to this, such as this one from Jake that said, here's a theory on why the Binance audit would be an absolute mess. He said Binance aren't necessarily making or taking huge fiat loans from external entities, but they are definitely making crypto margin loans to speculators, which may include loans to themselves. Binance is effectively trying to inflate the amount of money in their system by restricting withdrawals, allowing deposits, and making loans to themselves. And as Finance Lancelot tweeted, he said, we're entering the second stage where we find out that fake auditors were conducting fake audits for fake companies who were selling fake money. On top of the emergency global margin calls happening right now in the equities and bond spaces, margin calls in the crypto space is the last thing that these institutional investors need. These institutions are losing hundreds of millions, if not billions and trillions of dollars every single day across the bonds, equities and crypto markets, and they are approaching closer and closer to that dreaded margin call point. When these institutions finally end up being margin called, they will be forced to close out of all of their positions, selling off their longs and closing out of their shorts. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.